We have been talking about sole proprietorship. We have been talking about partnerships, and we also talked about limited company in yesterday's video insights, or in the most recent video insights. And today we want to advance that discussion by saying that it is not enough to open a sole proprietorship. It is also not enough to have a partnership or even to have a limited company if you don't keep the books properly. So today we want to talk about keeping the books. It is important in investments, in business, to be able to keep your books properly. If you're in business, of course, business involves purchases and business involves sales. You must be able to keep your books very well in terms of purchases, purchase prices, so that you can be able to use that to determine your selling price. And if you are able, therefore, to keep your books properly in terms of what you procure or in terms of what you purchase and also in terms of what you sell, it becomes very easy for you to be able to monitor whether your investment is bringing in proceeds or making profit or you are making a loss. It is important because investments are projects and projects must be monitored and evaluated. Part of the monitoring and evaluation of your investment is keeping tabs to the books. What do you purchase? How much do you purchase that particular item? And how do you sell it? And how much do you sell that particular item? It is important that if you realize that the purchases and sales don't make any sense in terms of you are selling less than the purchase price, then it means that your investment is actually bringing you losses. But at the same time, if you see that your sales are actually higher than your purchases, and then you'll be able to know that yes, your investment is bringing in profits. However, you must be very careful. The fact that your sales and your purchases are showing signs of profits or signs of progress, it does not mean that you already are making progress, because there are other costs that you need also to factor in. For example, licensing costs. For example, we also talked about taxation yesterday and the Kenya Revenue Authority taxing your income or your investment income. You must also take care of not only those costs, but also rental costs. For example, if your business premise or investment premise is a rented place, the cost of the human resource that you are using to be able to run your investment. So all these costs must be factored before you celebrate. But for today, we are just emphasizing that it is important for you to keep tabs with the books, taking care of the purchasing ledger and taking care of the sales ledger. You keep a book to record your purchases and record your sales so that you can be able to, on your own, even without bringing an auditor, be able to evaluate whether you are doing well or not. Thank you very much.